Hello everyone, welcome to The Financial Prophet. I am very glad to see you here. Today, we're focusing on a very special company that I believe many market participants may be misinformed about. Now, investing in this company has made me a lot of money over the years, and it could potentially make you a lot more money from here. The company we will discuss today is no other than Tesla. Now, before we get started, I just want to share a quick disclaimer. I am an independent investor, not a financial advisor. Please consider that anything discussed in this video is not investment advice and is not a call to buy or sell any securities, including Tesla's stock. I am simply sharing my knowledge and my personal opinions. Remarkably, Tesla remains one of the most prominent and possibly most misunderstood battleground stocks still after all of these years. It's essentially like politics. There doesn't seem to be much middle ground on Tesla's stock. Investors either love it or they hate it. And this dynamic is not likely to change anytime soon. Now, I've been an adamant Tesla bull for about 12 years now. I first started investing in the company stock in October 2013. Tesla stock has skyrocketed by about 3,500% since then, making it one of my top stock investments in my 20-plus year investment career. In fact, I've discussed publicly that Tesla would very likely become a trillion-dollar company as far back as 2017, and the company actually achieved this trillion-dollar milestone much more rapidly than I had anticipated. So let's discuss why I recently upgraded Tesla stock from a buy to a strong buy. Now, I published my most recent bullish Tesla article in July with a buy rating, and the stock has appreciated by approximately 30% since then. However, there was still a bit of uncertainty regarding Elon Musk and Tesla then. We were just coming out of the political storm, the tariff tantrum debacle, and the incident with the now infamous Jeffrey Epstein tweet had just occurred then. And while there were still many questions surrounding the company, I remained bullish on Tesla stock. And I actually increased my position around that low point at about $275 right after that Jeffrey Epstein tweet went out. Now, for the record, Tesla is my most significant portfolio position. It accounts for roughly 13% of my portfolio's weight now. It was a bit higher just several days ago. It was at about 17. I did take some short-term profits in full disclosure, not much, but I did realize some profits around the $430 level, and that's just because I am anticipating a potential near-term pullback to about maybe $400 where I will increase my stake in Tesla again. However, I began increasing my Tesla holdings substantially in the $150 to the $220 range in mid-2024 as the stock was getting no respect around this period. However, given the recent developments like the proposed $1 trillion pay package for Elon, his purchase of $1 billion worth of Tesla stock, improvements in FSD, increased production output in Germany, and other constructive near, intermediate, and long-term elements, I am upgrading Tesla's stock to a strong buy. Now, I want to talk a little bit about why, an 8.5 trillion market cap may sound outrageous, but it is no fairy tale in my view. Now, I discussed Tesla appreciating to a $1 trillion market cap in my first public Tesla article back in 2017. Again, just for the record, I've published about 85 articles over the years just on Tesla. Many analysts argued that the company was grossly overvalued when its market cap was only around $50 billion then. Well, provided that Tesla hit a market cap of around $1.5 trillion recently, it has increased around 30-fold since then. Therefore, going from a $1.5 trillion market cap to an $8.5 trillion market cap is only about a 5.7 times increase. So I don't see why this dynamic wouldn't be achievable given Tesla's enormous growth potential in various industries. In fact, Elon Musk's proposed $1 trillion pay package is essentially contingent on the dynamic that Tesla's market cap must expand to about $8.5 trillion or higher within a 10-year time frame. Also, Deepwater Asset Management analyst Gene Munster, Dan Ives, and Kathy Wood don't think that this is any kind of fairy tale, and neither do I. Let's consider several crucial factors here. Tesla is a dominant market-leading tech company. First and foremost, as I said in my interview 8 years ago now, Tesla is not a car company. It's a dominant market-leading technology company that sells cars. However, this doesn't mean that Tesla's vehicle segment will be its most prominent business indefinitely. In fact, I believe that FSD, AI, and robotics could be more significant, especially profitability-wise, within the next 5 years. Additionally, Tesla's cars are not ordinary electric vehicles. They could be perceived as robots on wheels, as they can drive themselves and do other things that many other cars simply cannot. What differentiates Tesla vehicles from other cars is their integration of software, hardware, and incredible ecosystem features that only Tesla has. And I believe that Joe Rogan may have said it best when he said that Tesla essentially makes other cars feel stupid. And I agree with this statement 100%. Now let's talk a little bit about Tesla's enormous FSD and AI potential. Tesla's cars have multiple cameras that continuously record everything and ping some of the data back to Tesla's supercomputer, integrating its vehicles and the enormous amount of data into Tesla's broader ecosystem and AI. Tesla has one of the most advanced AI FSD programs, and some analysts, including Dan Ives, myself, and others, believe that the FSD segment alone could easily become $1 trillion plus market cap business for Tesla within the next few years. Tesla's robotaxis are becoming a common sight as the company continues improving its FSD capabilities. There's now an unreleased to the public FSD version operational in robotaxis, which does not require supervision from the driver. We can only expect this technology to continue improving from here. Elon believes that Tesla will have autonomous ride-hailing in at least half of the United States by the end of this year. Tesla now has approval to operate in Texas, the Bay Area, and Nevada. So this may very well turn into a sort of domino effect. Therefore, Tesla's FSD business can potentially start delivering considerably more revenues and profitability much sooner than many market participants expect. So let's talk about the next step here for Tesla. And the next logical step in Tesla's development process is their remarkable robotics program. So robotics will very likely be the next massive business, and especially for Tesla. Now, Tesla's robots appear to be the best out of anything robotic related I have ever seen. The Optimus Gen 2 seems pretty impressive, but it's likely nothing compared to what Gen 3 will be like. Also, consider that Tesla will incorporate AI capabilities with robotics. Yes, xAI's Grok in a robot. You don't think there will be a massive market for these things, especially if they're priced at only about $20,000 or $25,000? One of the reasons why Tesla has done so well with electric vehicles, energy generation, and storage, which, by the way, on its own could be worth about $200 billion. And, other segments they've done really well in, is because the company always looks ahead, well ahead of the competition. And AI integrated robotics is the next massive market. Elon believes that about 80% of Tesla's future value could come from the Optimus segment. Some claim the Optimus business could be worth at least $4 trillion, but ultimately it could be worth much more than that, as Tesla shifts away from electric vehicles and focuses more on robotics and AI. Citigroup's analyst believes the humanoid robotics business could be worth $7 trillion in the future. And Morgan Stanley thinks it can be a $5 trillion market by 2050. Now, these are, of course, guesstimates, but I believe that Citi, Morgan Stanley, and others are actually lowballing this market. It could become a much bigger market than people actually expect right now. Of course, 2050 is a long time from now, but given Tesla's market-leading position in the robotics segment and AI, the future could arrive much sooner than expected. Therefore, I don't see why Tesla's humanoid robot business can't be worth about $1 trillion or more in the next few years, potentially even sooner in a more bullish case scenario. Now, technically speaking, Tesla stock is overbought in the near term. I'm not going to sugarcoat it. The RSI is around 80, and Tesla could have a mild pullback, especially if the broader market corrects in future weeks and months. Nonetheless, we have to put things in perspective. Elon Musk bought more than $1 billion worth of Tesla stock very recently in a price range of $371 and about $397. So in that roughly $370 to $400 range, Elon purchased over $1 billion on the open market worth of Tesla stock, which is a massively bullish statement. In fact, this dynamic illustrates that Elon has a very high conviction in Tesla stock going much higher. Also, this phenomenon potentially limits the downside risk. Think about it. If Tesla stock temporarily dips below $400, Elon could buy many more Tesla shares. Also, the last time Elon purchased a significant number of shares on the open market, it was about 200,000 shares, worth roughly only $10 million at that time. And this was in February 2020, when the stock was only about $50 per share split adjusted. And this was actually right before Tesla stock exploded higher, posting about an 8x return over the next 20 months or so. This, of course, implies that Tesla could be on the cusp of another major breakout. Now, this time, Elon purchased 2.57 million shares worth over $1 billion. Now, this appears like a pretty solid signal that Tesla stock could do extremely well as we advance. Also, please consider this. In order for Elon to have sufficient control over Tesla, or let's say as much control as he would prefer to have, he would likely need to own about 25% of the company's shares. And even with this recent purchase, his share of the company's outstanding stock is only about 13%. So I am speculating here, but the recent $1 billion purchase could be the beginning of a broader purchasing plan to potentially increase his stake in Tesla to that critical 25% mark. So again, this dynamic may suggest that Elon could make more open market purchases, simultaneously limiting the near-term downside potential and significantly increasing the probability for a much higher stock price as we advance. Now, granted, he would have to spend a staggering $170 billion or so, with Tesla's current stock price to reach that 25% goal. However, please keep in mind that Elon paid $44 billion essentially out of the blue to buy Twitter. He is, the richest man in the world, and his net worth could be around $450 billion by now. Therefore, I wouldn't put it past him to gradually accumulate Tesla stock to increase his stake in the company in order to increase his control. So let's discuss where Tesla stock could be headed. Now, I am using relatively modest estimates in my view, as many analysts seem to have relatively low estimates based on Tesla's recent troubles, underperformance, and the lack of clear visibility into future sales and profitability increases from FSD, robotics, and other segments. Nonetheless, I believe that Tesla could report considerably higher sales and especially much higher earnings per share in a more bullish case outcome, if it can successfully monetize FSD, AI, robotics, and other considerably higher margin businesses. So just to go over my estimate chart here quickly, I believe that Tesla will report about 100 billion in revenues this year, and we could see a big jump because of much better automotive sales, FSD revenues, improving energy generation and storage, and other sales. So I believe that we could see about $135 billion in sales next year. And eventually this figure should rise to about 330 billion by 2030. Now, I expect Tesla to put up considerable sales growth of about 30% and maybe 25 to 20% in later years. Of course, 2025 is an off year because of all the mayhem that had to do with politics, Doge burning Tesla dealers, et cetera, et cetera. That is a transitory phenomenon that should go away. On the EPS side, of course, Tesla should become increasingly more profitable as it incorporates more of these higher margin businesses into its bottom line. So I expect its EPS to go from about $2.20 this year to about $20 by 2030. Tesla should put up very substantial EPS growth, and I'm assigning a relatively high PE multiple here, which should gradually decrease, and this is based on Tesla's enormous growth potential in several extremely lucrative futuristic industries. Again, robotics, AI, Tesla's ecosystem, electric vehicles, of course, FSD, and again, don't forget Elon owns SpaceX, The Boring Company, Neuralink, XAI, and this is actually the broader Tesla ecosystem that's under the Elon Musk umbrella, so to say. Now, all of these factors combined should really enable Tesla to perform extremely well in the future. Therefore, I believe its stock price in a modest case scenario could reach about 2,000 by 2030. And in a more bullish case scenario, I would say that a $2,500 to a $3,500 price target by 2030 is reasonable in my view. Thank you very much for watching my profit report. I truly hope that you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you. You can also join the Financial Profit, my exclusive investment community, which is seeking alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have an amazing day.